Thinking about balancing out some of that rate sensitivity that might now be embedded a little bit more into high yield by buying a little bit more floating rate leverage loans. Is that a consideration?
Yes, it is. And quite frankly, we do like leverage loans. We think it's an asset class that the retail investor has been mostly absent from.
I'm placing an order to buy Canadian dollar. Price I'm looking to buy at 127.99. For all of you who are looking to buy Canadian dollar, this is the price to place an order, and the price will be good to get filled, yeah? And okay, let's see. We'll be lucky to get filled this order.
Has been very uneven. We haven't seen the large-scale fiscal response like we're talking about in the U.S. or other developed markets, and so the demand rebound is not the same. And I think it's something that we really need to consider. If we look at the investment grade cohort of emerging markets, quite frankly, we don't find the prices there very attractive at all. Now, certainly yields are higher in the high yield area of emerging market debt, but there you're talking about some very fragile recoveries at this stage. So it's a much more careful game in emerging markets today.
Jane, just quickly, I asked Jim Keenan of BlackRock this question at the end of last week. Were you happy last week that you're in fixed income and not in equity markets? Was the desk happy last week?
Certainly with the shenanigans that we saw in the equity market, it is something we were happy to not have in fixed income. I think for us, the thing that gave us some pause is that even as equity markets were going down pretty strongly on a few days there, we weren't seeing Treasury yields follow suit lower. So that is something that we need to pay attention to. And if that trend continues, that decorrelation, that's something that's quite concerning, frankly, for asset allocators.
That is a really important final point. Gene, great to catch up. Gene Tenuta there of Columbia Threadneedle Investments. Tom, let's build on that. It was a brief break of 1% on a US 10-year last week. Didn't hold. Back up towards about 1.1%.
Yeah, I mean, nice up to 108, 109, right now 107. John, I'm going to call it range bound. Jane Foley said that this morning, that all the different asset classes is range bound. What I would suggest is there's a wide set of worries that are out there that are maybe not being discussed like they should be because we're looking at the equity markets.
That was one of the concerns coming into this year, Lisa, that you wouldn't get that buffer from treasuries. Didn't get it last week.
Well, last week it's hard to really extrapolate out too much since there was this mass deleveraging and a lot of people looked at the turmoil and blamed that turmoil on the drop. That said, some of the concerns that Tom is talking about are very real. The idea that you are getting variations in the COVID virus and that the ongoing vaccinations.
Okay, traders, position open on Canadian dollar at 127.99. Well done. So let's wait and see how long it will take us to get profit from this trade.
This is a second difficult job. You mentioned 50,000 earlier, John. It could come in southier of that. You know what? I like that. A sharpening of focus.
Sharpen the minds after a really crazy week, crazy couple of weeks, crazy year. Coming up, David Axelrod, former supervisory trial counsel at the U.S. Securities and Exchange Commission.
Wonderland.
From New York City this morning. Good morning. This is Bloomberg.
With the First Word News, I'm Rishika Gupta. A group of 10 Republican senators will present their coronavirus stimulus plan to President Biden today. Republicans have mostly rejected the president's $1.9 trillion proposal, and the plan being laid out today calls for spending less than a third of that. Still, the president has said he hopes two sides could negotiate a bipartisan deal. Former President Trump has named 2 trial lawyers to represent him at his upcoming impeachment trial. The president parted ways with his previous defense team over the weekend. According to CNN, those lawyers left after Trump wanted them to argue that the election had been stolen from him by massive fraud. And Iran warns the U.S. it can't return to the nuclear deal with just a single signature. The foreign ministry says first, the U.S. must reverse a series of key sanctions and allow the transfer of oil revenue. Both the U.S. and Iran are calling on each other to take the first step to restoring the international agreement. In Russia, more than 4,000 people were arrested in a second straight week of anti-Putin protests. Amongst those detained, the wife of jailed opposition leader Alexei Navalny. A Russian court is preparing to hand Navalny a possible 3.5-year prison term. The world's richest person again rocked the Bitcoin market. Elon Musk said prices spiking after saying Bitcoin is a good thing on the social media app Clubhouse. He wrote that he should have bought the cryptocurrency 8 years ago. On Friday, Bitcoin jumped as much as 16% after Musk changed his Twitter profile to #Bitcoin. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
It's not about protecting people from making bad trades. It's about keeping the playing field level. You can't do that in the middle of a trading cycle.
Senator Warren of Massachusetts speaking on CNN's State of the Union, from New York City this morning. Good morning, alongside Tom Keene, Lisa Brabitz. I'm Jonathan Ferro. That distinction, Tom, really important. It's not about protecting people from bad trades. It's about leveling the playing field. And on the latter, this goes back to a point that Mohamed Al-Arian made over the weekend in his Bloomberg opinion piece. Market democratization, Tom, leveling the playing field. And that was the question people asked last week. Now, whether you think anything nefarious is going on or not, put that to one side. Let the legal issues be dealt with the lawyers. Tom, this is about access to markets and people asking the question, why couldn't I trade when other people still could? Because I could still see the ticker at the New York Stock Exchange alive and well.
And the fury that you saw there in Thursday and Friday of last week. This is not the David Axelrod of Obama administration claim. It's the David Axelrod of Ballard Spahr law. What you need to know is we know on surveillance the length of the resume, the length of the bio is inversely proportional to the skill, except Axelrod is a wild, wild exception to that. His cases are extraordinary, both in private practice and his work with the Securities and Exchange Commission, and we're thrilled to bring you this voice on surveillance this morning. David, thank you so much. Really honored that you could be with us this morning. You did an insider trader thing at the Williams Court there in Washington years and years ago. If you were speaking to a body of attorneys today about what is to come in this uproar, what would you say to them?
You know, listen, I'd say that, you know, in the wake of this, everyone's looking for a boogeyman. But I think we're going to find out that nothing really has changed. Not really much was done wrong here. The rules are going to work fine. We may see other examples of this going forward, but I think the market's going to shake out. I mean, the small retail traders saw an inefficiency here, saw a window to do something, and they did, and they made some money. But you know, the stock's going to go back down probably, right. and I think it's probably all going to shake out.
How do you, as a lawyer, you've been with SEC against Cooperman, you've been on both sides of the fence practicing the law. How do you treat the Silicon Valley tone that we get from Robinhood and others? How do you handle the behavioral and cultural millennial tone that we observe?
Well, listen, there are very smart people at the hedge funds and at institutional investors. They've been scraping social media for years already. This is nothing new to them. It may be new to us in the general public seeing this. But, you know, they're going to have to build into it. They're going to build it into their models. They're going to end up probably taking advantage of it in ways that I wish I could contemplate because I'd be not working in the law. But, you know, they're going to deal with it. And it's going to all be built into how they operate.
What are the legal issues here, David?
You know, I'm not sure there are. You know, as I said, a lot of people are looking for something wrong here. But this isn't a case where you see deception on Reddit. It's not, people aren't lying about what they're going to do. They're saying, I'm going to buy this stock because I want it to go up. People have been doing this for years. So I don't see anything wrong there. You know, for Robinhood, you know, you need to look at the terms of contracts they have with their actual customers. But I haven't seen anything that indicates there's a problem for Robinhood either.
There's a larger question here, David, especially as social media takes on an increasing presence in markets. What's the line at which it crosses into market manipulation?
Yeah, I mean, that's going to be the difficult thing, right? I mean, usually in situations like this, you see people crossing the line, and the line is lying. The line is deception. The line is the pump as part of the pump and dump. So once you see people kind of exaggerating, fabricating what's going to happen, you'll see the SEC get very active very quickly. But if that line hasn't been crossed, if you just have Dave Axelrod sitting in front of his there, I don't think hedge funds.
И вот, у меня включается. Вот показывается уже 4. А? Да, конечно.
Does that matter?
I mean, no. In our system, hedge funds have been doing this for years. I mean, the intent is to make money. They don't care whether a business gets put out of business. I mean, which is the very possibility of the put options in this case. So no, if retail investors want to hurt hedge funds, that's the way our system doesn't capture intent. Our system is as long as you're honest, as long as you're not deceiving someone, your intent really is irrelevant.
What did you think? What was your response when you saw trading shut down on Thursday or Friday? Do you just assume that somebody got out front of those announcements?
Yeah, I always assume that if there's going to be a big shift in the way the market's operating, that someone with information imbalance is taking advantage of it.
How do you discover that? How does the prosecution discover that malfeasance?
Really simply, I mean, if it happened, I suspect that the SEC and perhaps the Department of Justice will send subpoenas for testimony, for emails, for Bloomberg IM chats.
There we go.
Exactly. I had to throw that pitch in for you. But, I mean, it's always in the records. So, I mean, if some hedge fund knew that Robinhood was going to take action and knew that would harm the stock, that information's probably going to be there. And the SEC or the DOJ, as I said, because this could be a criminal event, will find that.
David, as a former SEC official, given the politicization of this issue, the fact that AOC and Senator Ted Cruz came out and sided on the side of the Robinhood traders, this became a populist versus the system kind of debate. What are the long-term consequences for the supposedly apolitical regulatory agencies like the SEC?
You know, from a policy perspective, I don't know. It could go millions of different ways. I mean, from AOC's perspective, I mean, they could attack what hedge funds were doing in the first place. They could attack large put options that, you know, some people argue have no economic benefit in the beginning. Others, they could attack Robinhood and make sure that market access is in place for everyone. But really, it's hard to tell. I mean, the politics of this are really weird, as anytime you have AOC and Ted Cruz lining up on the same side of an issue, you know, one should expect. So I don't know. It could go a million different ways.
That's certainly a good way of putting it. David, great to catch up. Thank you.
Thank you very much.
David Axelrod, the former SEC.
Okay, I'm placing a stop on profit for Canadian dollar. Okay, the price I'm looking to sell, if it change direction, 128.1. Okay, 2 pips. Stop on profit. Better to have profit, okay, than loss. Okay.
There are lazy shorts that have been flushed out and that hedge funds themselves should want to move away from. And then there is the banning of short selling. And I don't recall a long that ever discovered a fraud. I think Jim Chanos and Enron all those years ago. I think some of the work that Muddy Waters did over in China over the last couple of decades, really impressive as well. I think the short side is still important, Tom. What happened last week? Actually, an element of it was just a really well-crafted, constructive trade that many people see as originating from the retail side. And, Tom, it worked.
Then you went long. I was asking Axelrod a question, and you got in your long trade on GameStop there.
Yeah.
Pop that puppy to 321.
A little bit late on that one, Tom. We pulled back just a little bit. We erased the losses of this morning. With Tom Keene and Lisa Abramovich, I'm Jonathan Ferro. For our audience worldwide, this is Bloomberg Surveillance, heard on Bloomberg Radio, seen on Bloomberg TV.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Let's just start with the numbers.
And it would be essentially free cash flow positive in 2021. That was sooner than people had been expecting.
We have pretty good numbers here in the biggest divisions of Morgan Stanley. They are firing on all cylinders.
We've had this huge rivalry historically between Morgan Stanley and Goldman Sachs.
There are 24 reasons for Mr. Diamond to celebrate today.
As much as people may want to focus on trading, for Bank of America, it's all about credit.
It seems the markets are very happy with Trump. They're very happy with Biden.
We have a social revolution going on between the haves and the have-nots.
It's the retail investors that could end up getting hurt.
It's probably going to end in tears for a lot of these retail investors and hedge funds.
People are looking for stuff that probably doesn't really exist.
We're going to go higher in inflation over the next couple of months. There's very little we could do about it.
The system is, from a financial stability perspective, still is robust.
If you don't reestablish functioning Wall Street and stability, it's disastrous for the economy.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Where did January go? Well, it's a snowstorm in Washington. Drive careful on Bloomberg Radio. You are out there in the storm. It can be, an inch here, 12 inches there, even more so scheduled as well. And, we'll have much more on that through the morning. On Bloomberg Television, across this nation and worldwide, February upon us. John, it was an eventful January, to say the least.
It was. I heard someone joke over the weekend, Tom, that we were going into month 14 of 2020.
Yep.
And that's what it feels like. And I think that joke applies to this market as well. And we need to talk about it. Huge bull case for 2021. How many cracks in it now?
Well, I don't know. Futures up 35. We're at the 30,000 level. SPX beckoning 3,800 as well. Everybody nuancing and adjusting their bull market. And the underpinning, John, to me, is a pretty good earnings and revenue season that nobody's talking about.
There's a belief we bounce back as well, Tom, in the second half. Let's be clear. That's what's been driving things since early November when the vaccine started to get approved. The clinical trials started to wrap up. The vaccinations actually started through December into January. That's the belief. And I think many people still hold that belief, that hope, that that's the story. And that's why they're willing to look through a negative payrolls print last month and perhaps willing to look through a really soft one this month as well, as we look to get about 50K this coming Friday.
We'll give you GameStop and silver through the morning. We're going to look at that. The story unfolds. Doubling news today. We've had some really good guests on that. Futures up 35. Dow futures up 220. The VIX comes in two big figures now, 30.70 on the VIX. That's an important statistic. And I look at the bond market. It's churning. It's up a basis point or so. John, am I going to get a 91 on DXY? Stronger dollar.
This goes into the base case for 2021, Tom. And Lisa, the bull case for the US dollar wasn't there. It was a weaker dollar, an improving global economy, and here we are. Dollar actually on the front foot this morning, a little bit of dollar strength. And I would say the key pair to watch, it's got to be euro dollar, just something really vanilla, super simple. What happens in Europe? And what does that dollar trade look like?
And I think that it goes to the heart of another consensus trade, which you mentioned, this idea that we are going to get to the other side by the end of the year. And that, too, there's some cracks in that. And actually, that's where I wanted to go, this idea that some of the vaccines are less effective against some of the new variations of COVID that have been found in South Africa in particular, Tom. This matters. It matters how quickly we vaccinate the world, not just specific nations. So, yes, from a currency perspective, perhaps you can bet bet on a short-term trade. Perhaps the dollar is stronger versus the euro because of what we're seeing with the vaccination schedule. Long-term, it affects global growth if we don't get everybody vaccinated soon.
And economic data, ISM, 10 a.m. That'll be right after one of John Farrow's properties. Look for that at 10 a.m. But I want to pause here before we get to our wonderful guest here on equity markets. I want to talk, guys, about the foundation call wrapped around silver, oil, copper, and the rest. And that, guys, is the Curry call, the Jeff Curry call at Goldman Sachs. John, Goldman Sachs has really been out front with their legacy of their index and all that to say, go long commodities.
Go long commodities. And Tom, that trader's word. I think crude's performed quite decently, and many people think we get the rebound. Look at manufacturing. You mentioned the ISM, right? Look at the ISM. It's north of 60. It's really, really strong on the manufacturing side. And for all the talk of Europe not doing well, it's not. Look at the manufacturing side. Things are better. And it's this two-speed recovery we've witnessed over the last 6 months or so, where manufacturing is actually doing pretty decently. The engine of that might be China. Services, look, we can't engage with the economy. It's no surprise services aren't doing well. But manufacturing gears and commodity prices have done okay.
And Lisa, the other side of that, and I want to pause here as well, because Farrow was in makeup, I think, getting ready for one of his properties. You're in my conversation on Friday with a gentleman, the #1 Korean restaurant guy in Manhattan. That showed the other side of the economy.
Yeah, we can't go out, we can't eat, and there are companies that are going out of business very quickly. And the question is, what can we do to save them? Can we? And what is the longer-term consequences, Tom, on the economy?
Danji, D-A-N-J-I. We'll do Uber Eats out of Danji maybe today. Right now with Verdance Capital, Megan Horniman joins us here, the Director of Portfolio Strategy. Megan, is your view February 1 the same as your view was December 15th?
As far as the entire calendar year, yes. And actually, we had forecasted quite a bit of volatility as we entered into the first part of this year because of the fact that we were dealing with this third wave of the coronavirus. So we expected to see not only some softening in the economic data, but then the markets kind of take a breather on some of this to kind of reassess what is going to happen for the rest of this year. And then second, the very slow rollout of the vaccination, that's only prolonging us being able to get back to normal. Our base case scenario is the second half of this year. Once we get more distribution of the vaccines, that will have better economic growth. And then into 2022, we think we're going to have this whole new second wave of pent-up demand where we can really deal with a couple multi-year economic expansion.
Megan, I love how it's now 22 because, and forgive me, middle of last year, they were talking about the snapback in 21, and now it's about this second wave of demand coming through 22. Megan, I think the investor appetite to stay long is really important, just how investors will behave, how they'll respond, the reaction function, so to speak. How willing, how tolerant do you think we'll be of weaker data from here through the rest of Q1?
Well, the thing is, equity investors particularly tend to look 9 to 12 months in advance. So while there has been a lot of volatility, which is extremely expected given the fact of where we are looking, valuation levels across a lot of areas of the market, pockets of bubble-like territory, you would expect to see some type of volatility, and that's regardless of what's going on with some particular names that I know you guys are going to talk about later. But the volatility in the market was expected. And most investors in the equity market are looking beyond this. This is short-term noise with what's going on with the economy. And let's just remember, we have the fix. The fix is here. The problem is we can't get it out. We have the vaccination. We have 2 of them, and we have a couple more on the way. So if we can just get this fixed out, if we can get this distribution sped up around the world, then this is the fix to the global economy. What we're going to be left with after we get everybody vaccinated, or the majority of the population vaccinated, is a significant amount of fiscal stimulus, extremely accommodative monetary stimulus, and very healthy consumer balance sheets. So this is a situation where we're looking at a very strong economy when we come out on the other end of this.
So this is the hope trade, Megan, that everyone's trading on. The question is, when do the fundamentals matter? When do you start looking at the jobs data, at the other services data that shows a very different picture?
Well, I think right now, keep in mind that this jobs data, there's always, the numbers that we saw before, whether we get a soft one this week. ISM's been very strong, so there's nothing that we can really say about that. I mean, we were at over 60 last month. So the manufacturing side's been what's been holding this up, aside from also housing. Right now, the biggest concern is the consumer. And we need to see some better forward-looking indicators with the consumer, whether that's stabilization and improvement in consumer confidence. We need to see better labor market data. And I'm not looking at just the jobless job reports. I'm looking at the jobless claims on a weekly basis. Those are the types of things that we think will really drive the consumer. And the consumer makes up, 60 to 70% of the economy.
In the United States, and Tom, I wonder whether that's going to be the trade. I'm just looking at some of the data on the vaccine front, on the rollout. We've got our Bloomberg tracker here. Almost 10 doses given per 100 people in the United States, Tom. And it's climbing quickly at a decent clip as well. If you can get the United States well vaccinated and pare back some of the restrictions, Tom, I wonder whether that enthusiasm starts to build for the US versus, say, the rest of the world, particularly Europe.
100% agree. And John, I mentioned this, the x-axis is underestimated. Megan, there is something about grinding it out every day in where we are, say, May 1st versus where we are now.
As far as vaccinations?
Yeah, and then what it means for the market.
Yeah. I mean, I think that let's say we go into May 1st and we've gotten we've gotten all of the 65 and older, and then we're moving into the real big bulk of the population here in the U.S. The one thing that we talk about what's going to happen in the second half of this year, so going beyond May 1st, is there's going to be this second wave of pent-up demand. When we came out of the first lockdown, what every consumer was spending money on was furniture, housing, fixing up their homes, landscaping, all of these types of things. But now the second wave of pent-up demand is totally different. What we think is going to be a totally different wave of pent-up demand that's actually going to be much more supportive for the small business community than what we saw after the first wave of the pent-up demand. And that's going to be Americans and globally, I think, want to spend on experience. They want to travel. They want to go to concerts. They want to go to the movies. They want to go to shopping malls. They want to get out and do those types of things. And these things, keep in mind when you travel, this supports local restaurants. This supports local businesses. This is extremely important because this is the side of the economy, specifically in the U.S., that's really kind of stuck right now. It's stuck in this in-between of getting reopened and being partially shut down.
Megan, thank you. Appreciate your time. Looking forward to catching up soon. Megan Horniman there of Verdant's Capital Advisors, with futures up 36. We advance about 1%, Tom, on the S&P 500. There's your snapback.
Yeah, it's a snapback, and we're trying to get a correlation here with a higher yield as well. We are, we're not, we are, we're not. But John, I'm going to again go back to the weak dollar certitude of what, 4 or 5 weeks ago? It's vaporized.
Can I get the technical analysis on GameStop this morning? Can you give me that?
On GameStop? Yeah, well, hold on. Let me go over
Stabilizing.
It's on one of my 4 logins.
Nice.
I don't have much technical yet other than softly south waiting for volume to come in.
Love it. Can we get a research report with a price target from you as well?
Yeah, well, I'll give you a target but no time, or I'll give you time and no target.
That usually works. That's what they usually try and pull off on this program as well,
That's
Tom.
true, yeah.
Coming up, Jason Schwartz, Yale School of Medicine Assistant Professor of Public Health, on a situation in the United States and worldwide as the WHO starting to put a bit of pressure on countries that are further along in the vaccination process. I'm trying to be serious, Tom. Come on. All right, sing. Futures up 1%. You've got 20 seconds. Sing.
Snow.
What song is this? Snow.
It's from a small movie, White Christmas, from a few years ago. I was trying to do my Daniel K imitation.
No, keep going. Take it out.
I went down in a blizzard.
You've got this.
Snow.
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 Play the lyrics.
So,
Wonderful.
I'm waiting for Rosemary Abramowitz to come in.
Can you play the guitar to this too?
No.
Lisa's retiring. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. Silver has taken center stage in the retail investor frenzy. They sent the metal to a 5-month high today, and that's fueling a debate over the power of Reddit-inspired speculators to take on ever bigger targets. A weekend buying binge overwhelmed online sellers of silver coins and bars from the US to Australia. In Myanmar, a big setback for the country's transition to democracy. The military has detained Aung San Suu Kyi, voided her party's election victory, and declared a state of emergency for a year. Myanmar's army chief says he took the action in response to voter fraud. He says the military will hold a free and fair election after the emergency is over. President Biden meets today with 10 Republican senators who have an alternative plan to coronavirus relief. They're calling for $600 billion in spending, less than a third of what the president wants. It's an opportunity for both sides to begin talks on a bipartisan deal. At the same time, though, Democrats could pursue the Biden proposal without Republican support. And AstraZeneca will deliver 9 million additional doses of coronavirus vaccine to the European Union in the first quarter. The EU is trying to get its chaotic inoculation drive on track. The extra doses will give in a total 40 million. That's still only about half of what the EU had expected AstraZeneca to come up with. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
likely towards the end of February, we'll have an advisory panel pending, of course, decision of the FDA, and then we'll see getting approval, emergency use approval, and then in March we'll be able to start delivering vaccines.
Another vaccine to join the effort potentially. That was Dr. Paul Stoffels, the Johnson & Johnson Chief Scientific Officer from New York City this morning. Good morning. Live on Bloomberg TV and radio alongside Lisa Abramowitz and Tom Keene. I'm Jonathan Ferro. Big week of losses last week on the S&P 500, a pullback of about 3%. The biggest weekly loss going all the way back to the end of October. It's a snapback this Monday morning, up about 0.9% on the S&P 500. A curious move in the bond market last week, the move that did not happen in the way that some people anticipated. Yeah. Equities down, bond yields up a little bit, in and around 1.1%. We had a break of 1% briefly, Tom.
Briefly,
didn't hold, and then we started to inch higher once again on a 10-year yield.
I believe I saw 109 at one point. Right now, 1.08 to round it up. Interesting to see, and again, a lot of economic data starting right after John Farrell's property this morning. Look for ISM data, which John holds to be very, very important. We just spoke to David Axelrod on GameStop. On the rest of this, he is truly an authority on the law, the regulation, what the SEC could do. We do the same thing now with this horrific pandemic. Jason Schwartz is at Yale School of Medicine. The title is Assistant Professor of Public Health in the History of Medicine. Baloney. He has the pedigree on the sociology of medicine in America, including medicine by committee. I love that title, Dr. Schwartz. Absolutely thrilled to have you with us this morning. I want to get philosophical, but I got to cut right to the chase as you do, where the J&J vaccine is distinctly important. What is the distinction of the Johnson & Johnson vaccine?
It's a one-dose vaccine. That's a game changer. You've heard that. It's a cliche, but it really is true here in the United States in particular. The idea of a one-dose vaccine, any vaccine right now, but the ability to have millions more doses introduced perhaps as early as a month from now really gives us the additional capacity we desperately need in the United States to scale up vaccination, and not a moment too soon, as we're now expanding our vaccine rollout to new populations. So it's a badly needed tool, and one that looks really, really promising to add to the Pfizer and Moderna products.
If it is pandemic by committee, how do we get organized and find authority to get this fixed faster?
That's been the challenge, this fragmented piecemeal approach that we've seen in the United States throughout the pandemic and in all regards, and really has cost lives. And we've seen a fragmented approach with respect to the vaccine rollout. Some of that's unavoidable. That's how public health works in the United States. We lean on our states and municipalities to do a lot of that frontline work. But we've needed more federal coordination, more federal guidance, more federal leadership. We're starting to see that. I think we're starting to see less of a 50-state solution to the vaccine rollout and something that is more guided. That takes time. It's hard. We're now doing it in mid-course. It would have been much easier to do this back in the fall. But I think we'll start to see that balance between federal guidance and state leadership that's supported, that will help us get through this what's been a rocky rollout so far. There's no doubt about it.
Markets right now are pricing in a recovery at the back half of 2021. Given the vaccination schedule where it is and the pace of the ramp up that you're talking about, are we actually going to see that recovery?
You know, that's a good question. I mean, I think we'll see and end up seeing a lot more vaccine doses. I mean, a massive increase. We're already at 1 million to 1.5 million doses a day here in the United States, above that million dose target that the Biden administration has set. I think we can really scale up even faster come March and April with both the Johnson & Johnson vaccine and then those other vaccines that are moving through testing here in the United States, AstraZeneca and Novavax. I think by summer, we're going to see massive vaccination programs and the ability to hit all of our high-risk populations, our high-need populations, so that come summer and come into the fall, I think we're going to really be in a much different place, thankfully, in terms of what the pandemic looks like, and then the consequences for the economy, the consequences for our daily life.
Well, let's talk about the consequences for the global economy. Professor, how concerned are you about so-called vaccine nationalism?
I'm very concerned about it. I mean, we've already seen, when we look at research that's shown where countries have bought up commitments from the vaccine manufacturers here, it's disproportionately high-income countries. We know that there's a vast global need. We've got this global coordination through the WHO, through Gavi, this COVAX facility that's intending to bring vaccines to the low and middle income countries, but it's not nearly enough when we look at the billions of doses that will be needed for low and middle income countries. And the prospect that the vast majority of less wealthy countries may have to wait well into 2022, according to some estimates, to get vaccines really is ominous. So we need to recenter, to refocus those global efforts. Again, the U.S. has signaled they're back in the World Health Organization. They're going to join this global vaccination effort. But the idea that it's every country for itself is already starting to loom on the horizon. And there needs to be a more global cosmopolitan approach if we're going to fight this global pandemic with global variants that present threats to all of us.
Jason, I'd like you to build on that because I was struck by data that showed that J&J and Novavax's vaccines are much less effective than the South African strain. The idea that we could get everybody vaccinated with these vaccines and then find that the pandemic is still spreading because it has mutated into a new form that is resistant. How close are we to that kind of reality?
The vaccine is absolutely, it's chasing a moving target with respect to the viral variants. That makes it all the more important to vaccinate as aggressively and quickly as we can right now to tamp down viral replication, viral circulation, do all of those other measures that can help reduce the spread of the virus, and then to monitor these variants. We have, thankfully, platforms now, particularly the mRNA vaccine platforms, that we're understanding, be modified, can respond to variants. But it's going to be a moving target for sure. The fact that J&J didn't seem quite as responsive to that South African variant is a cause for concern, but it only underscores the urgency of both monitoring the variants and keeping that vaccination program at full throttle while we know the vaccines are still really effective against the circulating viruses that we're seeing at this moment.
Professor, terrific to catch up. Come back soon. Jason Schwartz there of the Yale School of Medicine. And Tom, just a word if you can on vaccine nationalism. I think is a real worry in the medical community at the moment. The WHO just about starting to put pressure on developed nations who have got so far along in the vaccination process to stop once they've already vaccinated the most at risk in society, to allow developing countries to catch up. Because let's be clear here, there is a risk, and the professor's speaking to it, that you can vaccinate the bulk of your society, pull back restrictions, but if the developing world hasn't done the same thing, Tom, the variants start to build again, and it's a threat to the already vaccinated population because maybe those vaccines don't work.
3 months ago, John, I looked at the vectors of California, New York, Florida, blah, blah, blah. The first thing I look at about every 4 days when I look at the virus math is the dispersion in.
Moving on, my stop on profit for Canadian dollar to 128.04. Right here.
It's also Europe. How quickly can we reopen some of these corridors, the transatlantic corridor, if you have Europe lagging behind the U.S. so much in the vaccination schedule?
You saw that headline from Poland. Won't vaccinate the elderly with the AstraZeneca shot. This follows the doubts in Germany over the same vaccine. That spat in Europe over AstraZeneca. Not going away anytime soon. Coming up, Torsten Slok, formerly of Deutsche Bank, now of Apollo Management, the chief economist, on this economy, as we count you down to an important payrolls Friday, just around the corner. For our audience worldwide, live from New York City, heard on Bloomberg Radio, seen on Bloomberg TV, alongside Tom Keene and Lisa Abramovitz, I'm Jonathan Ferro. This is Bloomberg.
一个就是我们看中它的那个品牌吧，它品牌 就是说东西比较干净嘛，然后比较方便的话，味道也还可以的话，我觉得我会考虑吧。外卖的话呢，也是一种方式，就是品种会多一点嘛，各有它的特点吧。
这个车的话，目前我们是通过这个手机 APP 上，就手机扫码，然后微信和这个支付宝扫我们这个车上的这个二维码，大家就可以进入到一个小程序的这个界面，然后呢就可以选购自己喜欢的商品，然后付款之后呢，这个柜门会自动打开。
支付成功，请拉开右侧车门取货并关紧柜门。
然后我们会取餐，然后完了之后呢，就把餐这个柜门关上，然后整个购买的这个流程就会结束。
柜门已打开，请取出货物并关好柜门。
Generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
This is the 1980s all over again, to make sure that we keep our hands firmly on the driving wheel.
I do not see demand coming back to the pre-COVID level anywhere earlier than the end of 2022.
If that happens and we see a demand recovery, then I think the market can absorb it.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Do you remember looking forward to 2021 and then waking up in 2021 and it felt like 2020? That's how I feel this morning. This isn't the right board. Can we get the right one? Try and get some S&P 500 futures. Or I can just talk about Exxon and Chevron. Do you want to talk about that? Apparently, reportedly, Tom, they had a little chat about getting together last year for a brief
You wonder
moment.
where the government will step in on that. There we go.
Magic. Let's start again. Rewind. There we go. From New York City for our audience worldwide. It's the price action. Equity futures up 31 on the S&P, up about 0.8%. Last week, downdraft in the bond market. Yields moved by about 2 basis points lower on a 10-year. Towards the back end of the week, though, Treasury yields were pushing higher. That's a story for some of you I know. If you're going to have that downward move in the equity market, will you get that support from the bond market? There were doubts coming into 21. Those doubts were reinforced last week. If we can switch on the board just quickly, I'll bring you 2s, 10s, 30s. Show you where the bond market is this morning with a snapback in the equity market. There's the move. Up about a basis point, Tom, to 0.757, 1.8%, 1.08%, let's say, going into payrolls Friday, where we're looking for a really soft print again. After a negative print in December, looking for about 50K for the month of January when we get the payrolls report this Friday, Tom.
Well, 10-year yield not through a 108 right now, John. We'll have to see how that goes as well. Again, I want to know dollar strength today, 90.88 on the DXY. You don't follow that, usually a blended major trading currency feel, but nevertheless, there it is. Euro stronger than yen over the last 2 days. Torsten Slok held court at Deutsche Bank for years, writing must-read 12-page papers that always had not one, not two, but 3 charts where you would stop and actually have to read the report and read the captions under the charts. That's how good he is. He was snagged by Apollo Management as their chief economist. We're thrilled that Mr. Slok could join us this morning. Torsten, I want to cut to the chase, which is the idea of long-term inflation expectations. No one cares. Commodities lift, and it's real simple. On the central bank watch, so should Mr. Powell pay attention to Dr. Copper?
I mean, this is a very important issue in rates markets and therefore in everything fixed income. I mean, inflation expectations in the long end, so 10-year break-evens have gone up almost on a linear trend since March. There have been a few wobbles here and there, but this is certainly something that's very important for the Fed. Then, of course, the question becomes, well, why is it that the market suddenly expects inflation in 10 years' time to be higher? And there's a number of different explanations. The first one, as you mentioned, Tom, is that commodity prices are almost mechanically correlated with long-term inflation expectations. So commodity prices going up is a very important driver. But another very important driver is the Fed changed framework from just normal inflation targeting to average flexible inflation targeting. And therefore, the Fed saying will allow overshooting has been pushing long-term inflation expectations up. That's good here and now, but it is certainly a very critical thing to monitor if we do get that strong growth in the second half this year that you guys have covered so well.
Do you think that markets right now, Torsten, are underpricing or overpricing inflation?
So if I look on Bloomberg screen today, there is really no inflation in trim means, in core PCE, in core CPI, no matter what Fed measure or BA measure that you look at for inflation, there's just no actual inflation. So all of this has to do with what are expectations, of course, both in the next few quarters, but also what are expectations if you look several years out. So for now, I think the market is a little bit getting ahead of itself in the sense that we will not get that much inflation. We will get some base effects, of course, here in the next few months, as we all know. But going into 2022, still we have a lot of slack in the economy. We therefore, as you also just spoke about, the labor market is not great on Friday with the numbers that we get for January. So at this point, it's still too premature to worry about inflation.
Not to get philosophical about this, Torsten, but as we see higher commodity prices and as the prices of goods goes up as a result of supply chain disruptions and other COVID-related issues, how much could we see some sort of, not disinflation, but stagnation, this idea that people's wages are staying the same or going down, the employment picture is weak, and they are forced to pay more for the goods that they need?
That's right, and that's the environment we have today. I mean, commodity prices going up, and at the same time, we have also had very little employment growth, and unfortunately, we still have, as you know, that the employment situation that we have 10 million people less working today relative to February 2020. So the labor market is indeed still very weak while commodity prices are going up. If you look further out, then of course it becomes more almost a philosophical issue whether you think that it is the level of capacity utilization that matters. In other words, in the Phillips curve, should we worry about the level of the output gap or the change in the output gap? That's a sophisticated way of saying that should we worry about a growth spurt potentially giving some inflation in the second half of this year, or should we say, oh, that's not a problem because the unemployment rate is still so high? So there's a lot of thinking around this issue, and I'm sure the Fed is looking very carefully at this potential risk that we could have that the growth burst we get in the second half of this year does lift in particular services pricing.
Torsten, talk to me about financial stability risks. And we've gone through the labour market. There are very clear reasons why this Fed wants to keep rates low for a long, long time. Do you see them doing that at the sacrifice of really making sure that financial stability risks don't build?
That's really important, Jonathan. There is a very critical paper recently by Capillero and Simsek that tried to look at exactly why is it that stock prices are so seemingly disconnected from fundamentals. And what they are arguing, which makes a lot of sense, is that it's actually the optimal strategy for the Fed to say, if we know that this shock is of limited nature, in other words, it will be over at some point, then we should be easing financial conditions as much as possible. We should be creating a disconnect between stock prices and credit spreads and the real economy, because that does accelerate the expansion later on. So in that sense, I think the Fed looks at this and says, yeah, we do know that stock prices might seem relatively high. We know that credit spreads are very tight relative to fundamentals, but this is the best strategy for us in terms of getting the economy as quickly back as possible.
That's the objective. They've been successful. Torsten, I can pick example after example where they've managed to divorce financial conditions from economic fundamentals. Do you think we can ever reconcile that?
Yeah, so now the question, of course, becomes, well, once we then get to the pandemic being over, what is the world then going to look like? And in particular, if this is associated with rates going up, and this is where you get a little bit worried about what sectors in the S&P 500 are most vulnerable to higher rates. And that's, of course, those sectors that are more long duration, and that's, of course, in particular tech. So if we do have a move higher in rates in the second half of this year, both in the front end with Fed expectations and also in the long end, then those parts of the S&P 500 that are more sensitive to a higher discount rate, and in this case, in particular, the tech sector, would also become more vulnerable. So you're right, Jonathan, that if we do have a much higher level of valuations once the pandemic is over, then we do begin to, in particular, as I said, become more vulnerable to rates moving up.
Within the system, Torsten Slok of Apollo Management, do you see effervescence? Is it an effervescence? I don't mean bubble in an amateur sense like that, but do you just see a ferment there from all this gross accommodation?
So I think that the Fed and the ECB answer would be to say, we have done what we can do with the tools we have. And that's why the debate, as you also have talking about earlier today, is that now we're switching from monetary policy, having done whatever they can, and that results in high asset prices. But that's why the fiscal discussion is now so absolutely critical. The small issue that we haven't really spoken about yet is, of course, that the number of cases is coming down quite quickly, not only in the US, also in Europe, also in the UK. And I mean, think about a few weeks ago in the US, we had about 300,000 new cases every day. Now we have about 150,000. If you put, admittedly very simple, your ruler down and ask the question, if I type CVID on my Bloomberg screen, when will we actually get that the number of new cases will be close to zero? You get, and I know this is a bit extreme, thinking both about the strains from Latin America and South Africa, etc., but you get that we get to zero new cases sometimes here, potentially already in March. So that's why the speed with which the number of cases is coming down, that's something that we should not underestimate, that we could potentially have the growth spurt, not only in the second half this year, it could potentially already come in the second quarter of this year. And that, of course, would be an upside surprise to markets.
The upside surprise. So would you suggest that this bull market valuing out 6 months, valuing out a year is fairly priced?
So that's why that comes to when we will begin to see inflation, and therefore the Fed dovishness, will that be sticking, or will the Fed be having to turn around quite quickly? As you know, the Fed is at the moment saying we will not hike rates until 2023. This is almost the premise for the hunt for yield, people buying first the duration in treasuries, then IG, then high yield, and then equities. If we do begin to see that growth comes faster and quicker, and the ketchup effect, if you will, is much more speedy than what we all expect at the moment, then the Fed would certainly have to pedal back and begin to talk about rate hikes coming sooner. But the question therefore is the Fed going to stay dovish? Clarita has said that we'll do QE, meaning buy 80 billion in treasuries, 40 billion in mortgages throughout the end of this year. If we have 3 very strong quarters of growth here in the next 9 months, then we could have that the Fed could be potentially begin to taper already sometime in the second half of this year.
Torsten, one thing that you did so well when you were at Deutsche Bank was put out these charts showing the divide in the labor markets, showing the divide in the economy between haves and have-nots. From your seat now at Apollo, there is a question, when does this divide in have and have-nots affect markets, which have been relatively divorced from it and moving on very different factors, in part because they're dominated largely by the bigger, more resilient companies? When does it become a real problem that you have a two-track economy with a two-track labor market?
I know, Lisa, and it is a K-shaped recovery, and as you have covered so well, this is creating all kinds of issues, in particular with leverage in companies that have very little earnings, not only because of COVID, but have not had earnings for 3 years in a row, the so-called zombie companies. And what this is also opening up is, of course, that there's a number of, if you will, unintended consequence of the very, very quick reaction that the Fed had during this crisis. Normally, a recession cleans out balance sheets. In 2006, it was cleaning out balance sheets in the housing sector. It was cleaning out balance sheets in the banking sector, cleaning out balance sheets in the household sector, meaning consumers. This time around, the Fed and the fiscal policy makers came to the rescue so quickly. So therefore, normally we then say, okay, we had a recession, we can now have another cycle the last 10 years. The issue is that this recession really didn't clean up much. And therefore, many of the problems that we had pre-COVID, most importantly, leverage in the lower rated companies and a lot of companies that are much more at risk, that problem is still here. So in that sense, many of the vulnerabilities that you normally clean out with a recession, those vulnerabilities are still here. That's why going into this new cycle that we're literally entering here as we speak, it does raise some questions about, well, but this cycle starts out on a very vulnerable footing. And that is a problem when you think about how long this cycle actually can end up being.
Serious issues. I have to say, though, Torsten, I just love that Apollo just allowed just a little bit of stubble. Just a little bit.
It's COVID.
No, it works.
John.
No, it's that you talked about the Deutsche Bank Apollo transition. I'm just taking it seriously to the next level.
You've got a little stubble.
Yeah, I know.
You've got it going on.
It's allowed here, too.
Oh, yeah. So
that's why I'm saying thanks, Torsten Slok of Apollo Management. I thank Lloyd Blankfein once as well. Just for making it okay.
You think that they're trendsetters, the trendsetters of Wall Street.
It's to groom, just to groom.
To groom.
I think Tom's got this right. It doesn't have to be clean shaven.
Style tips.
Just to be groomed.
Style tips with Jonathan Farrow.
No, you can shave and still be sort of unkept. Do you know what I mean?
I do.
You could wear a suit that's 5 sizes too big.
Oh, no, we're going back down.
You want to do that again?
No.
A little bit later. Tom wants rid of me. You get a segment without me in a second, Tom. Citigroup, Tobias Lefkovich.
Yes!
On Bloomberg TV in about 20 minutes. On the Open. I've got to go. Okay, this is Bloomberg.
Take your entourage with you.
With the First Word News, I'm Ritika Gupta. A group of 10 Republican senators will present their coronavirus stimulus plan to President Biden today. Republicans have mostly rejected the president's $1.9 trillion proposal, and the plan being laid out today calls for spending less than a third of that. Still, the president has said he hopes the two sides could negotiate a bipartisan deal. Former President Trump has named 2 trial lawyers to represent him at his upcoming impeachment trial. The president parted ways with his previous defense team over the weekend. According to CNN, those lawyers left after Trump wanted them to argue that the election had been stolen from him by massive fraud. In Russia, more than 4,000 people were arrested in a second straight week of anti-Putin protests. Amongst those detained, the wife of jailed opposition leader Alexei Navalny. A Russian court is preparing to hand Navalny a possible 3.5-year prison term. And the world's richest person again rocked the Bitcoin market. Elon Musk said prices spiking after saying, quote, Bitcoin is a good thing on the social media app Clubhouse. He wrote that he should have bought the cryptocurrency 8 years ago. On Friday, Bitcoin jumped as much as 16% after Musk changed his Twitter profile to #Bitcoin. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
I feel we have a very good chance to not only have positive growth, but perhaps a somewhat more encouraging positive growth.
The rebound in the second and third quarter will be quite strong because the expectation is that the vaccine will help clear the way to less restrictive lockdown.
We are going to have a recovery, but it's going to be an uneven recovery.
Of course, it will have direct impact on our growth forecast, and it will be very difficult to reach 6% of growth.
You're going to get a roaring 20s type of recovery and a boom period.
We are certainly seeing ourselves towards the second quarter being almost opening the economy as much as one can.
We should not be too quick to cut back on the expansionary fiscal policy.
We'll get there. The question is not a question of if, it's a question of more when.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Preston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Price swings are just wild.
GameStop, AMC, BlackBerry, and the like.
Some very weird and wacky moves in some of these stocks. It's really a casino atmosphere.
We are worried about the integrity of the marketplace and the clearing systems.
To me, sounds a lot like market manipulation.
What we don't need is for Congress to come in and save everybody.
From a financial stability perspective, still is robust.
Everyone's talking about
investors and hedge funds.
A great set of voices. Chris Marenghi there with Gabelli, of course, with some terse comments. A special thanks to Governor Carney, the former governor of the Bank of England, who digressed from climate change to give us some very candid comments about this moment. Lisa Bramwitz and Tom Keene on radio and television, and we are thrilled right now that Edward Vanderwalt joins us. He is with MLive in London. Eddie Vanderwalt, we usually speak to on, well, anything to do with the markets. It's going to be Bitcoin here at 34,000, but today he is a commodity expert on silver. Eddie, the absolute distinction here is non-tangible or intangible paper assets, derivative assets, versus the tangibility of a delivered commodity. Why is silver different?
Silver different? I mean, silver is a completely different ballgame to all of the other markets, or the single stock tickers that this Reddit crowd has taken on so far. It's a completely different ballgame. It's a far more liquid, far more concentrated market. And I think I looked at some of the data for the average volume that we saw in silver last year versus the average volume that we saw in GameStop, and it's 200 times bigger. We're talking about something like $11 billion a day going through on the silver market. So for the Reddit crowd.